Okay, folks, good evening. This is Andy Pedraza with Special Effects Academy on the start of the week session for the Forex trading room on March 10th of 2019. We'll go through our usual agenda, look at prior week, the currency strength meter, fundamental announcements scheduled for the week, analysis of the major pairs, any setups in progress, and a few words in conclusion. Starting off with the long-term ledger, we did get taken out of a couple of pound trades that reversed yet again. So the pound is in very choppy waters, essentially going sideways, but with pretty wide bounces. We also took a bit of profit on other trades, such as the euro dollar and the Aussie JPY. So overall negative, but not by much. We're still waiting to latch on to a longer running trend, which of course is what feeds the long-term account. On the short-term account, a rather lackluster week where we were down about 200 pips again, mainly blamed on a couple of pound pairs that again went against as the pound retreated. So not the most stellar week for the short-term trading, but again, these things happen. And unfortunately, with the volatility in the pound, we're either going to have to start banning the pound trades on the short-term account or figure out another way to mitigate risk. So that is a work in progress. So notes and opportunities for improvement beyond what I just said, which is pretty much repeated here. Again, the long-term account is reasonably flat for the last few weeks. We're still waiting to catch on to a bigger trend. And as regards the pound, this is yet another key week as another Brexit vote is happening in Parliament, with now a very, very looming deadline, as March 29th is still the official date for Brexit to happen one way or another. As I've mentioned before, at this point, nobody expects that to actually come to pass. So the likelihood of Brexit being postponed, delayed, or canceled altogether are pretty high. But there is nothing set in stone right now. So we shall continue to expect rather choppy waters with the pound. At this point, I'm probably not going to be entering any long-term trades with the pound pairs, rather trying to fish in troubled waters as we see some of these bounces. So the likely strategy that we're going to pick to trade these is to put in some pending orders to take us into the pound trades if they start bouncing in one direction or the other. You see we lost the screen. Give me a second and we'll try to get that back. Okay, there we are again, and wrapping up the notes and opportunities for improvement, our final section there, trades remaining open in short-term account. We do have two shorts open right now that are holdovers from last week, the Kiwi dollar and the Aussie dollar, both of them shorts. And with that, we move on to our RSM, our relative strength meter for this week, where we look at the last 30 days as well as the week that just ended. So volatility on the 30-day chart is slightly down by about 1 percentage point from where we were last week. We can see that we have, on the monthly, we have a key winner, being the New Zealand dollar has outperformed everybody else in the last 30 days. The clear loser has been the yen, underperforming everybody else in that same period. We have the metals getting significantly weaker at the same time, and I apologize for the screen bouncing on and off, but looks like we're having some internet connectivity issues. It will come back. But the screen that we were looking at, I'll continue for the last 30 days. The Aussie has actually gained ground against everybody except the Kiwi, the pound, and the dollar. So it's had a little bit of a recovery, though the outlook for the Australian dollar continues to be very poor as of the last weeks. we've had a lot of negative outlooks and news coming out of Australia. The Canadian dollar has similarly suffered significantly in the last 30 days, and really in the last week. We've had a bolstering of the CAD thanks to oil prices rising, but that's been undone in the last week with corruption allegations against Justin Trudeau's government, which seem to be sticking. So the government right now is in damage control. That is affecting the economic outlook for Canada, which is not a large economy to begin with. So these things have a little bit of a higher effect if and when they do happen. So we've seen the CAD retracing against most of the other currencies in the last couple of weeks. It does seem to have finished doing that. Not sure it has a lot more to give, especially if oil prices continue improving. But there is a risk with the CAD right now. So we're going to be very careful with that. The Swiss in the last 30 days has been pretty flat. It's lost ground against some currencies, gained against others, not really moved all that much. The euro has similarly been flat to weak, especially the past week has seen it lose ground significantly as the European Central Bank gave a significantly dovish outlook last week during their interest rate fundamental. The pound, of course, has regained strength in the last month, very bullish as Brexit seems to retreat, in that most people at this point do not think that Brexit is actually going to happen. So the last 30 days were really good for the pound. But if we look at the last week, the pound was the clear loser as just sentiment shifted yet again for reasons totally unknown, other than that there has been no official cancellation of Brexit, and we're now a little bit over 2 weeks away from actually seeing the deadline come to pass. So in the last week, we've seen the Aussie start losing ground again. The CAD, as I mentioned, lost ground. The Swiss had a pretty bad week. The euro had almost as bad a week as the pound, and that's where we did make some recovery in the losses that we suffered through the pound. We regained some of that through the euro. The yen had a pretty good week. Actually, it had a great week. This past week saw the yen get higher against pretty much everybody else, and we did take some profit out of that as well, as we were long on we're trading into yen strength on a couple of pairs. The Kiwi and the dollar were middle of the road. And again, the Kiwi seems to be looking for a direction, as is the dollar. Silver had a great week, probably the best week in a pretty terrible month. And similarly, gold had a pretty good week. So the more uncertainty we see coming into the market, the better bullion is going to be doing. And this last week was very good for the metals, again, within a pretty terrible month for them. So it's a little bit of one, 6 of one, half a dozen of the other. Volatility for the week was also significantly down. We were coming from a weekly volatility over 5% the prior week. This has gone down by about 50% to the close to 3% right now. I think it was 540 something percent the week immediately prior. So we have had a drop in volatility. At the same time, as you can see that the market seems to be picking sides, and some of the currencies are being hit harder than others, at least on the weekly. Moving on to our fundamentals for this coming week. A very light calendar, but very significant fundamentals all the same. On Tuesday, starting at 2 p.m. Eastern Time, we have yet another parliament Brexit, which is pretty much Theresa May's final opportunity to have her Brexit plan approved or modified to some degree that she can salvage something. According to the news articles, there is a plane pretty much kept ready for whenever Theresa needs to hop over to Brussels to have some face-to-face conversation. So that's how delicate this has begun, that they actually have a plane ready to take off at a moment's notice if Theresa May needs to go get something approved on the Brussels side. So that vote on Tuesday at 2 p.m., which dovetails with our trading session, is going to be yet another key one. And like I said, we're not planning on entering any pound trades proactively. Rather, we're going to be tracking some of these events and movements and trying to get in on a breakout in either direction. It is too soon to tell which way the pound is going to go. It could as easily go one way as another. So we'll be trading that one live Tuesday at 2 p.m. for the duration. We may have the trading room open for hours. Every until we have a final. And this issue have not come out at the time that they've been announced previously. So we'll make another time Thursday during our afternoon session. So during the 2 p.m. session, we'll take a look at the calendar and see if the schedule is still firm for that 10 p.m. And we'll adjust accordingly if need be. But I do plan on trading that one live on Thursday if and when it does come out. And those are the only two fundamentals scheduled that of any interest to me, I should say. There's others, but that I'll be trading. It's those two, with the higher priority given to the UK's parliamentary vote. So again, those will be in the schedule one way or another, and we'll figure out how we're going to play them. Moving on. Going to start out with a week with some pretty wide movements, especially Friday. So oil price really dropped all the way back underneath the 55 level. So it went to the 54.70, 54.60, somewhere around there before bouncing all the way back up to where it had started off. So it was a bounce of about $1.50, give or take. And oil has pretty much refused to go below that 55 level, or at least stay below 55, really 56 for any significant period of time. It has broken out of the trend line in a sideways fashion, which is really not support at the 54.77 holds. We're still in a bullish movement, and this should be very good for the CAD. But as I mentioned before, the Canadians have had a ton of trouble with these corruption allegations that popped up and are pretty much assaulting Justin Trudeau's government. So the CAD has not taken advantage of the relative strength of oil as much as it should have. And of course, we're waiting for the Canadian government to get out from under the shadow of those allegations, if it does, to see a little bit of a boost for the Canadian. Right now, it's also in a very delicate junction where I really don't know which way that thing is going to go. It's all going to depend on how these things play out, the corruption allegations, as well as the oil price, if it continues going up or starts stagnating. Moving on to our currencies, the euro dollar broke a significant level of support at the 112.35. It ended Friday trading at around that level, so it went back all the way to resistance support. However, we can see that there is significant weakness coming back into the euro, and we are trading it in that direction. We took about 100 pips profit on a euro dollar trade last week, and on Friday, it has broken forward, and it's hopefully a bottom. So we'll see how that pans out. It looks like the screen is having a little bit of delay. I see that the oil price is still the one coming up. Let me reset that and see if we can get it to behave a little bit better. Okay, so there we have the euro chart that I was mentioning, so we can see how it has breached that significant level of support all the way at the bottom. Made a new low on Thursday and did a bit of a retrace on Friday, but we're definitely seeing a significant short trigger on the daily chart on all levels. So we'll see how that pans out this week. We did short it again. I'm going to be monitoring that one very closely, see what it does as the week starts out, and well, we'll take it from there. Moving on to the pound dollar. As I mentioned at the top of the call, we saw the pound getting significantly stronger up until last week when it all just came tumbling down yet again. We got caught on the wrong side of that with the pound dollar, and there it goes the screen again, guys. I'm going to switch to another device here, so bear with me and see if we can get some stability back. I do apologize for that. But bear with me 1 second, and we'll see if we can get this a little bit more stable so we can continue. Okay, so that should have us a little bit more stable. Let me know if the screen bounces for you guys again. But we're looking at the pound dollar. As I mentioned, it did break the trend line. It broke support. It broke everything, and we have a retreat towards the outer trend line. And also, as I mentioned, we will not be trading this one other than taking advantage of any significant breakouts it does via pending orders. We're not going to be picking a direction until at least the end of the month, beginning of April, when we get a little bit more guidance on Brexit itself. Moving on to the USD/JPY. Also, as mentioned, the USD/JPY was very bullish. It was heading up, and then it had a break towards the end of the week. We did get out of this trade pretty much flat. We had a long-running bullish trade on USD/JPY. We took a little bit of profit, I think, and got out of it before it collapsed. We also went short on another JPY pair where we took a little bit of a chunk of profit. So all in all, we did well with the yen last week. But USD/JPY has gone down to the inner trend line, and we would be waiting for some direction to be established this week. And most of the yen's back and forth has also been due to the turmoil in Europe as Brexit winds down. So you should expect to see the yen a little bit bouncy until we get some more clarity out of the Europeans and the Brits. Moving on to the USD CAD, and again, as mentioned, the USD CAD, which should have continued heading down and broken that outer trend line, instead did a complete retreat past the prior level of resistance above the Ichimoku cloud. And all this was really attributable to the upsets, the corruption scandal that popped up for Trudeau's government in the past 10 or so days. I do think that as regards to USD CAD, it's topped out, and I already opened a short on this pair late last week, but this could still have a few surprises. However, it was just too tempting not to take the short, since I would expect it, once things start to clarify, that it will head back towards that trend line, and that is a nice chunk of pips. USD Swiss is another one that retreated this past week and then already started retracing on Friday back towards the channel. So we are short on this pair. We've been short for a while. There is no change to that. Our stop loss is above the highs that we see there on the screen. So we're not at an immediate risk of being taken out so long as it stays in that general vicinity. This is a trade that we may indeed have open for months because I am going to wait this one out this time until it does a test of the bottom of the channel or until it does such a breakout towards the top that I'm convinced that it's no longer happening. For now, very much in play. Moving on to the Aussie dollar, this is another pair where we're getting very close to a breakout towards the bottom as it starts testing the support of the Ichimoku cloud. It has not quite broken out of the prior lows, even ignoring that big spike. Just looking at the prior lows, it still has a way to go. We're short on this on the short-term account. So we're still looking for it to go down to some degree, and I'll probably give it another week to do so. Otherwise, I will get out of that trade. But for now, it was a calculated risk to let that one remain open over the weekend. Kiwi dollar, same thing. We are short on the short-term account on the Kiwi dollar and looking for it to continue the breakout from the wedge. It did pop back into the wedge on Friday. I'm not sure if that was part of the usual Friday retracement or something else is going on, but this is another one that'll continue to let it run for about a week and see what it does. It'll either hit our exit, our limit, or pop out of the other side of the wedge, in which case I will close that trade, assuming it hasn't hit the stop loss before that. But it looks like we're seeing a little bit of uncertainty come back into the New Zealand and the Aussie. Definitely the Aussie, because we've had all those dovish comments from their central bank, their major banks, as well as and their trade and commerce department, where it's looking like the trade balances and trade agreements with China are a little bit on dodgy footing right now. So all in all, I am definitely bearish on the Aussie and very, very carefully bearish on the Kiwi. And the Kiwi may not be as affected by these issues plaguing Australia, though there is some fallout to the New Zealand economy. But I think that the fact that it's trying to break out of the bottom of the wedge as well as crossing the Ichimoku cloud is a decent enough short signal. We also have a Tenkan Kijun cross happening right now, which are the blue and the red lines from the Ichimoku, also giving us the beginning of a bearish signal. So we'll see how that one pans out. Again, it's a short-term trade. I let it run over the weekend, and I'm going to give it another week to see what it does. Moving on to the Aussie CAD, and again, this is going to be one of those where we're going to be highly dependent on what happens with the Canadian government. For now, this is still in a nicely bearish pattern, following two trend lines towards the bottom on the daily. We don't have any open trades. I think we took some profit last week on the Aussie CAD, not much, a bit. And I would be happier shorting it than anything else, but I'm going to wait for a proper signal before we get into that. Euro Swiss, and we have an open short on the Euro Swiss right now after the break of the trend line in a bearish direction. It's also angling to cross the Ichimoku cloud towards the bottom. Once again, another bearish trigger, and we're looking to trade it all the way to the bottom of that chart. So we'll keep in that one so long as it makes sense. Euro pound, and this was a short-term trade that did hit us where it hurts last week as the pound reversed its direction, then promptly reversed it all the way over again. So it's very choppy, it's very sideways, and as I said, we won't be entering any pound trades probably for the rest of the month, other than trading breakouts from support and resistance via pending orders, but we're not going to try to time or pick a direction on these pairs for the remainder of the month. Euro JPY did a credible attempt at breaking out towards the top of the channel, which failed towards the end of the week. So we had to go all the way back to the bottom. So that was a non-starter. It's actually given a bearish signal on Thursday into Friday as it crossed the trend line, but we ignored that one. I'm not going to be taking that trade until we see a little bit more strength. More strength in either direction from this pair. Euro Canadian, yet another cat pair that went towards the top on these upsets, and it has done a credible recovery since. So it went all the way to a prior level of resistance, bounced off of it, bounced off the Ichimoku cloud as well, and made its way about halfway back towards the channel, but it's still in no man's land. So I'm going to be looking at direction in both the Euro and the CAD. And if they do align, I will take a trade. But if I see them going in opposite directions, it's better to let this one play itself out. Pound JPY broke the trend line, as did most of the pound pairs on that reversal that happened last week. This one didn't go as deep, however. So it bounced off a prior level of support. It did break the trend line, but it's still in the general vicinity. Now, half of this move was due to the yen getting stronger as much as the pound getting weaker. So I'm not sure where this one's headed. Again, I'm not going to be entering any pound trades other than breakouts from support resistance. But this one is a prime candidate to put a collar on it and trade it up or down depending which direction it goes. So in the next 24 hours or so, I will pick my entries on the pound JPY and a couple of other pound pairs and see where that takes us for the week. They will have trailing stops as well, so that if we see a sharp movement, which I do expect a sharp movement this week one way or another, we take advantage of as much of that as we can. Aussie JPY now on your screen. It did give us a short entry and we took it. So we took that short entry and we did capture a bit of profit off of that. We exited the trade on Friday as it started retracing. It's still trading underneath the trend line, underneath the channel, and I may re-enter this pair in the same direction if I see a little bit more strength in the movement. So I'm going to be taking paying close attention to it this first 24 hours of market activity to see if there's anything there for us. Euro New Zealand, very sideways. It's broken out towards the bottom again, so this may be a short in the works. Again, I'm not too convinced with the New Zealand right now, which is why this one has been so choppy. But for me, fundamentally, it's still a pretty decent short. I do expect a little bit more weakness out of the euro before all is said and done. And that's what most of this movement was, by the way, euro weakness based on the outlook that came out with their interest rate decision. So that's really why it hasn't convinced me too much yet. The Kiwi has not been moving so much as the euro has. If we get a stronger Kiwi for whatever reason, and this one starts angling towards the bottom again, I will take that trade. Pound Canadian, another one that suffered, or rather went towards the top as both the pound got stronger and the CAD got weaker. But towards Friday, it reversed itself yet again. So we saw that weakness coming back into the pound, even though the CAD was also getting weak. The pound beat it, and it's gone all the way down to that prior level of support that was established around the 22nd, or is the last week or last couple of weeks of January. So another one where I'll set up a collar so that we can go in long or short, depending which way it moves, looking for a drive in either direction and a trailing stop so we capture as many pips as possible. Pound Swiss, same thing, except that we're still in the Pound Swiss. This one has not taken us out because it hasn't moved as much as the other pairs, so it's still in play. I let it live because I think that there's more of a chance of the pound getting stronger as Brexit technically, or whatever you want to call it, gets canceled. But again, we'll have to see how the week picks up. You may be closing that trade out and just setting up a collar as I will with the others so that we get taken in only in the right direction and make as much of it as we can and then get out. But for now, we're still in the Pound Swiss long-term trade, bullish, and we're down about 100 pips. And that is the end of our charts for this week's session. A little bit of a cheat sheet here with the setups in progress. The USD is still going back and forward. So we really haven't established a direction for the dollar in a while, other than that the dollar continues to hold strong, despite there being signs that the economy is weakening all over the place. Even with the labor report that came out on Friday, it was so off the charts, below what the market expected, that it was just incredible. So we had a huge miss, and still the dollar didn't really get weaker. So I don't know what the market's waiting for. Obviously, sentiment is what drives the market in the short term more than any fundamentals or technicals or what have you. And sentiment continues to be bullish for the dollar. The question is, how long is that going to last? So I think we're at that point where, where's the powder keg? We're waiting for a spark to ignite it and cause a dollar rout. So you have to be careful with that when trading the dollar, especially when trading it into dollar strength. There is a high probability that we're just, one bad news event away from seeing a dollar crash like we haven't seen in a few years. And we're overdue for one too. So keep that in mind. The euro, as I mentioned, has been breaking prior support on multiple pairs. The euro dollar, the euro New Zealand, the euro everything. So it seems to be showing a lot of weakness, but that will all depend on the outcome of Brexit, which again is going to be there for the remainder of the month, unless we get a final conclusion coming out on Tuesday, which gives everybody clarity. So expect weakness from the euro, but also be very careful because that can go away as quickly as Parliament decides, if it decides to actually do something. Which segues perfectly into the pound pairs. So a crucial week for the pound as their Parliament votes yet again, with a very, very close and looming deadline for Brexit. March 29th is still the Brexit date. So that's 19 days away, a little over 2 weeks. And of course, on Tuesday, we'll have to be tuned in to see exactly what is decided. However, unfortunately, if we go by the past few votes, nothing is getting decided. They're just kicking the can further down the road each time, but they're running out of road. So the road ends on March 29th, and this is the last scheduled vote. Anything else that they schedule beyond Tuesday is going to be an extraordinary session. It's not going to be on the calendar. They're just going to have to wing it. And again, if there is no resolution on Tuesday, the uncertainty that will throw into both the euro and the pound is just incredible. The only unfortunate thing is you don't know which way they're going to bounce. The Aussie Kiwi pairs, as I mentioned, also weakness is returning to the Aussie in huge amounts, thanks to a weakening outlook across the table on their economy, on their currency, on their trades, on everything. And the Kiwi, while a little bit tight to the hip with the Aussie, their economy is very commingled. The Kiwi is still looking for direction. There is a chance that the Kiwi will come out stronger and will actually have one of these rare divergences between the Aussie and the Kiwi where they go in opposite directions. So stay tuned for that as well. And last but not least, the CAD pairs. What should have been a great month, a great week for the CAD, is being undone by these corruption scandals that are hitting Trudeau's government, and they're sticking. They're refusing to go away. So if that were not the case, we would be seeing a much stronger CAD, but it is the case. So we have to trade reality and not what things should be. But again, everything short term in the market is sentiment. Obviously, sentiment is going against the CAD right now. But if we do see the scandals either clearing up or being swept under the rug, it doesn't matter which, then oil price will return to its importance as a fundamental driver for the CAD. And oil prices are pretty much either hanging out sideways or going up. There has been no significant retreat of oil since the end of the year, since the end of last year. So that's what we have in progress right now. And again, touching on a theme I mentioned before, we are looking for a trend, and the market is really not giving us a trend yet. Usually the first 3 months of the year are pretty good for establishing trends. It is seasonal to some degree, but this first quarter of the year has been very choppy, very flat, very non-committal. And a lot of that blame has to go to the Brexit uncertainty, which has been pulling two major currencies, the euro and the pound, just pulling them up and down with no rhyme or reason, and very unpredictably as well. So it's unfortunate, but it does happen. When we get into a trendless market, we just have to stay strong, hang out, and wait for something to give. This is perfectly normal. We're always going to have periods like this. And trendless markets are often what separate the amateurs from the pros. We will rack up losses when we're doing a sideways market, both long-term and short-term. But when we get out of the trendless market, we usually make everything up and then some. So that's all I can say is hang tight, stay strong, and better times will come. Any comments or questions from anyone? Going once, going twice. Okay, in that case, thank you very much, and we will be back tomorrow for our 8 p.m. session. First trading session of the week, and see you guys there. Thanks a lot.